Hi everybody, Chris Lawhead here again. This is a training video on the difference between lenders. I'm going to cover the top three companies that you will encounter when you're shopping for a mortgage. I'm going to cover banks, direct lenders, and mortgage brokers. Let's start with the banks. Here's the good thing about the banks. They're on every corner. You're probably comfortable with them because you've walked in and out of those doors a dozen times. You know, they have good online banking, all that. Banks are generally much more expensive. Generally much more expensive. One thing about the banks too, especially if you just walk in, you're going to go to their retail division. If I walk in on your behalf, then I'm going to go to the wholesale division and I will get you a better deal. And that's how that works. So if you go into Wells Fargo and apply for a mortgage and go through that process, and I go into Wells Fargo and I already have a relationship with Wells Fargo, I'll go to their wholesale division and I'll get you a better deal. That's how that system works. So that's banks. Let's talk about direct lenders. Direct lenders are the lenders who brag about lending their own money. We lend our own money, right? And that's fine, but what that tells me is they only have one pipeline. They only have one option. When you come to a mortgage broker like me, I have 20, 30 different lenders in my system, and we make them all compete. So if you don't fit in a certain pipeline, if you're self-employed or if you've got unique issues, if you've had a divorce or something like that, you won't fit into every pipeline. And this is especially true for the banks. So you want to have as many options as possible. That's why when I started investing 12, 13 years ago, I did my homework and I started with mortgage brokers. But anyway, let's back to the direct lenders. So the direct lenders lend their own money, and in my experience, they're certainly better than banks. And then they also brag about their underwriters next door, and they can go talk to their underwriter anytime. I don't see the advantage to that over a mortgage broker because I don't have an underwriter right next door. I have to call them. And then I have a backup, and a backup, and a backup. And by the way, if they turn out to be unreasonable, then I won't use them. I can essentially fire by not using that lender if they have an underwriter that just won't let certain deals go through. So, every company has their own pipeline, and if you're a direct lender, you only have one. So you hope you fit into that pipeline if you've walked into a direct lender shop. So they have less options, but they're certainly better than banks. And we've looked at being direct lenders. We've researched that, and the price just doesn't compare. When you make companies compete, when you make lenders compete for your business, like a true mortgage broker does, a true mortgage broker can take you to at least a dozen, if not 2 or 3 dozen lenders and have them duke it out for your business. That competition drives the price down. So, kind of the hierarchy in my limited experience that I've found is the most expensive place to get mortgages is a bank. The kind of middle folks are direct lenders, and then the least expensive are mortgage brokers like me. That's why I've chosen to be a mortgage broker. Now, I will say if things change, I'll go work for a direct lender shop. Absolutely. I want to do right by my clients and offer them the best stuff that's out there. And if this changes, maybe I'll delete this video later and go work with a direct lender. But it hasn't changed in the 12 years I've been watching this stuff happen, and I doubt it's going to change anytime soon. So, and then the final, let's just talk a little more. I know I've gone through it a little, but let's talk about mortgage brokers. A true mortgage broker, again, shops your loan. They have multiple lenders, multiple underwriters, multiple pipelines, multiple options to find the best fit for you. And all those people competing, all those companies competing, drive down the price, and it's best for the consumer. Competition is good. Competition is a good thing. So that's my short overview of banks, direct lenders, and mortgage brokers. Let me just give you one quick story, then we'll end this video. A good friend of mine went into a bank not that many years ago, maybe 5 or 6 years ago, I'm guessing, and he's self-employed, and he wanted to buy his first investment property, and they denied him. They wouldn't do the deal. He went into the next major bank, because that's where you start when you haven't done your homework. You start at the bank, I get it. Walks into the next bank, they deny him. Thank God he did not listen to them, because he kept looking, he kept asking, and he found a wholesale mortgage broker shop, and they got him his first deal. They got him his first investment property. Today, that guy, my buddy, is a millionaire. He is a millionaire real estate investor because he got his start. And since then, he's used mortgage brokers the entire time, every deal he's done. But if he would have just listened to that banker who denied him at the beginning, he wouldn't be a millionaire now. So that's a huge, huge difference. I mean, that's a big deal to me. So that's why I've got some passion about this stuff. That's why I'm doing these videos. That's why I'm telling you everything I can in this video series to help you make good decisions. So it's like that. I hope that helps. And if you need anything else, just give me a shout. Thanks.